Howdy, y'all. Before you blow another paycheck on a shiny new prop firm challenge, I need you to sit down, grab a coffee, and hear me out. Because the way that some of y'all are treating these prop firms like they're your financial soulmate, chasing after them. No, ma'am, no, sir. That's not your huzz. That's a toxic situationship, as they say, with, terms and agreements and rules and things. So you might be out there bragging, I got funded, like it's your new personality trait. Meanwhile, you're just one email, one tiny rule break, one quick tick of drawdown during a news event away from them taking away your whole career overnight. Is that what successful trading looks like to you? Really? So today I'm gonna keep it real and tell you what those flashy marketing pages and that 20-year-old guru with the rented Lambo are not telling you. We're going to get into the meat and potatoes of why the vast majority of people will never see a real dollar out of these firms. And we're going to talk about how most of this so-called funded trading is really happening on sim anyway and not even out there in the real live market. And we're going to look at what the actual legends, the real traders, the Paul Tudor Jones types do with their money. And just a little hint, they aren't asking a faceless website for permission to trade. And y'all, I'm not saying never touch a prop firm again. I'm saying stop being the one getting used. Stop simping for them. Use them as a side hustle while you build your real empire. If that sounds spicy to you, go ahead and hit the like and then we'll get into the real talk. All right, let's look at the facts, not the feelings, facts, okay? When you look at the data from the firms that actually have published some stats, and bless their hearts for pretending to be honest, the odds are not really very cute. Across the industry, it's usually only about 5 to 10% of traders that start an evaluation actually pass it. That's basically single digits, all right? Topstep, one of the bigger names out there, reported in some past data that typically less than 1% of people who actually start actually make it to a truly live account where real money is exchanged. But here is the biggest lie they tell you, and this one really grinds my gears. And it's the leverage lie, because they tell you, congratulations, you're trading a $50,000 account. And you think, wow, I have $50,000 of buying power. No, you don't. Let's do the math. If you have a $50,000 account, but the rules say that you lose the account if you lose $2,500 in your trailing drawdown, you don't have a $50,000 account. You have a $2,500 account. That 50K number is marketing fluff. It's fairy dust, all right? The only money that you can actually use is the drawdown buffer. So if you're trading 2 or 3 E-mini contracts on that account, do you know what your leverage is? You're effectively trading 300 to 400 times the leverage on your effectively $2,500 worth of capital. No professional Wall Street risk manager would let a rookie trader run 400x leverage on their first day, but these firms encourage it. They hand all of this sim leverage out like it's samples at Costco on Saturdays. Why? Because the faster you blow up, the faster you pay the reset fee. And that reset fee, that's the real revenue. We actually got a peek behind the curtains recently with the My Forex Funds case. Now, full disclosure, this is Forex, not futures, and the US case against them had issues because the regulators messed up the procedure. So the case ended up being dismissed in 2025 just because of misconduct by the CFTC. But What the regulators alleged in their original complaint was wild. They claimed that while traders thought they were trading in the real live markets, the vast majority were really still trading on sim accounts where the firm was their own counterparty. So that means when you lost, they kept your fee, and when you won, they paid you out of other people's fees, which is called B-booking. Does every firm do this? No. But do we have a verified list of who is A-book or real market and who is B-book or sim? Also no. Fortunately, futures prop firms are under much stricter regulation, but keep in mind that sim-funded accounts are technically neither A-book nor B-book. They're really their own animal. So if you think every funded account out there is routing your 10 lots to the live S&P 500, I have a beach house in Arizona to sell you. Even most of the earned live futures accounts are sim-funded, aka simulated funds. Now let's contrast that with real trading funds, your money. When it's your account, there's no daily drawdown where a bot will just kill your account and nuke the whole situation. There's no violation email because you held through a drawdown. You answer to one boss, and that's the market. This is how the legends operate. Let's talk about the GOAT, Paul Tudor Jones. In October 1987, the stock market crashed, and it was called Black Monday. It fell over 22% in a single day. People were literally jumping out of windows. This is why we have trading halts these days. But Paul Tudor Jones, he tripled his money that month. He made an estimated $100 million personally. How? He studied history. He saw that the 1987 chart looked exactly like the 1929 crash chart, and he loaded up on short positions. But here's the key. He had to endure some massive swings in volatility in order to hold that trade. The market whipped around violently before it finally crashed. If Paul Tudor Jones had been trading a funded account with a tight trailing drawdown rule, he would have failed the evaluation early in the morning. The volatility would have breached his account before the crash even happened. The rules that these prop firms set up are designed to prevent you from trading like a real macro investor. PTJ is famous for saying losers average losers. He even kept a sign on his wall to remind him. His obsession wasn't getting a payout. His obsession was defense, protecting his capital so that he could stay in the game long enough to catch the big move. Prop firms teach you to gamble to hit a profit target quickly. Real money trading teaches you to survive. Okay, Bull Barbie, so should I just delete all of my prop accounts? No! Don't be a drama queen. No, we're going to be smart about this. We're going to use the sugar daddy strategy. Here's the mindset shift. Your goal is not to be a prop trader. Your goal is to be a self-funded trader who uses prop firms to speed up the process and get some extra bonus income. Rule number 1 is the flow must go one way. Every single payout that you get from a prop firm does not go into buying a new watch or renting a Lambo. It goes straight into your personal brokerage account. We're draining them to feed our own beast. Rule number 2 is aggression versus grandma. On the prop account, you can be a little aggressive. It's their rules, their churn model. If you lose the account, it sucks, but you aren't homeless. Treat it like an ATM that sometimes eats your card. Don't go buck wild where you're buying new accounts every day, but that's the place for those trades after you set a budget of how many you can go through each week. On your personal account, though, you might want to trade that more like a grandma protecting her pension. You size down, you respect risk, you aim for consistency, not home runs, and you wait for those very best setups. Rule number 3 is don't let them own your psychology. If 90% of your stress comes from trying to not breach a rule that doesn't even exist in the real market, you've lost the game. Flip the script. The prop firm is just a tool. If a tool breaks, you get a new one. You don't sit there and cry that your hammer broke. I know some of y'all are gonna say, but I don't have the money to trade real futures contracts yet. And here's the hard love from your Auntie Barbie. If you cannot scrape together a small micro account, and I'm talking a few hundred to a couple $1,000, then your number one trade right now is your other source of income and not these charts. Get a side hustle, drive Uber, sell stuff on eBay, build that initial seed capital yourself. That grit, that is what makes a trader, not passing a demo challenge because you got lucky on a news candle. Real wealth is built on ownership. Ownership of your skills, your decisions, and your capital. So stop simping for these companies. Stop acting like they're your savior, like they're your only ones that can help you achieve this goal. Be your own savior. Now, if you want to see exactly how I manage risk on my own accounts, from the specific levels that I come up with and my analysis of the day to how I enter and manage my trades once I'm in the trades, take a look at this video and this playlist. These are the lessons that I wish that I had as a newbie trader to help tell the difference between gambling and professional trading. So click the things and I will see you on the ranch real soon. Love you. Bye.